just to go on a very basic level, there's three different components that come with the CheatCode Algo, right? Essentially, what you're looking at is you got multiple colors here, and the colors all give you a very easy to identify understanding of what's happening. Everything you see on a particular chart, it just seeks to give you a piece of information, right, about what's happening with that particular stock, right? When you don't have it on there, this is all you see. You see red and green candles, up and down, up and down, up and down. Not a whole lot of information until you start to really draw your technicals and do things like that. Here, this gives you a really good foundation to understand, okay, here I enter into a particular, when you see a B right here at this particular point, this tells me that I've entered into a potential buy phase, a buy zone, all right? So now I got my buy zone. That's the first signal that we want to kind of look to give us an idea that it may be time to buy. The second signal that we got is this cloud that follows underneath of the candlesticks. This cloud is either going to be flat, it's going to be diagonal, going up, or it's going to be diagonal and going down, right? Obviously, if we're taking a buy signal, we want that trend to be going up in an upward direction, all right? So once we have the buy signal, we wait and we see that we have an upward trend being established inside of our cloud here, our volatility cloud, and that tells us that volatility is going in our favor. It's going in the direction that we want it to go, because volatility means something going up and down rapidly or going up and down significantly. As traders, we make our money from stocks going up and down. If the stock just stayed flat, we wouldn't make any money, right? Unless you created a strategy to make money for stocks being flat, which there are strategies out there for that. But as traders, we want stocks to be volatile. We want them to go up and down, right? That's how we make significant amounts of money. So when we have the trend going upward in an upward direction, that tells us that the volatility is going in our favor. So that's the second thing we want to look for. The third thing we want to look for is that our CCA squeeze down here, this squeeze here, his histogram comes with 4 different particular colors. One being dark red, telling you that you have a strong downward trend. Faded red, telling you that you have a weak downward trend or potential upward trend. And then the bright green, telling you that you have broken into a nice upward strong trend, okay? And then faded green, obviously, it gives you a weak trend or potential downtrend. So with the CCA squeeze, you also have 2 clouds here as well. You have this green cloud to the bottom and this red cloud to the top. As these bars start nearing this red zone to the top, this is starting to tell you that this stock is running hot, right? That this is basically getting into overbought territory. And once you're here in overbought territory, you want to start keeping an eye out for a potential reversal. So these little red dots give you little periods of time where you could potentially be getting a reversal, kind of like a flashing red light when you go to a traffic stop. That's kind of what this is. These red dots are telling you, hey, this is getting hot up here. It might be time. Or on the flip side, you have the green dots when things are getting a little bit oversold. It tells you that the stock is oversold right now. It says, hey, you might want to start looking at taking a potential entry to the upside, right? So once you got the green trend going upward in your CCA squeeze, the next thing we want to look for here is in our CCA swing. Now, on the CCA swing, we also have overbought and oversold levels. This top red line right here and this top bottom green line right here, they both give you, and then this white level right here gives you basically like a support line, basically like a neutral zone. So this top red line tells you that, again, you're entering into overbought territory. Once you start seeing your CC swing start hitting this red line, you're going to look for this red dot or this crossover in the CCA swing. Truman, one of my lead admin in the Discord, he came up with a very, very clever analogy for the CCA swing. And basically, it was that if you think of it as like a ribbon, right? Basically, when the ribbon's starting to the flat broadside is when things are, basically trending in a direction, and then it'll start to get thinner as the ribbon starts getting ready to turn over. And once it starts turning over to the green side, one side of the ribbon's red, one side of the ribbon's green. Once it starts turning over and starts going to the green side, you start looking to get an uptrend, right? So this is your ribbon, it's kind of a little wider down here. It starts getting thinner. And then right at the white level, the 0 level here, or support level, it flattens out, it turns green, hits positive, and then it also triggers another buy signal. So here we have 4 different indicators that tells us that we're in a buy signal. So we have the buy signal that started, it was flat, so we're not going to enter. Then we get the uptrend here, right? So in this area here is where we're going to look for a buy. We get all these things lined up right here, green, 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 all going positive, and that led us to a upswing trade, right?
Now, Francis, I just want to be clear, because a lot of people might be going to their Yahoo Finance and they're going to try to put in the indicator a CCA squeeze or a CC swing. Mm-hmm. That can't happen, y'all. I want y'all to understand. This is an algorithm that these 2 gentlemen created. Right. So it's specific to the cheat code algo. All right.
Yeah, and then also, just to kind of, I can't see YouTube comments, so I want to make sure that they can see. So Troy, can you just look to see if
everything looks good over here. We got a lot of cheat code algo famers in here. Everybody's looking pretty good in here right now.
All right, so let me just explain for people that might not be familiar exactly what's going on. So you probably heard of stock charts before, and when you're looking at the chart, you look to see if a stock is going up or if a stock is going down. So, but this is like more of a deep dive into the chart. So it's like, nobody really knows how hot dogs are made until you actually work in like a butcher and you see like, oh, that's how they actually make hot dogs. It's like a mystery. So for a long time, stock charts, it's kind of been like a mystery where you just see a regular stock chart just going up and down, but there's a lot of indicators that go into the stock charts. So what this is technical analysis on a high level, just kind of, explained. And what they did was they kind of just combined a couple different things to make their own algorithm. We'll talk about that. But for now, I just want to kind of just let people know exactly what they're looking at. So I'm going to back it up and ask you a couple questions that people might not be familiar with. So when you say a stock is overbought, people always get mad at me for I never really was that good in grammar, so I bought whatever. But when you say the stock is overbought, explain that to somebody that might not be familiar with what you're talking about.
So essentially, when something is overbought in the market, you have things that basically go up. Like stock market, obviously things go up, things go down, right? But we all know that things don't go up forever, right? So when things start getting, go up too fast, too quickly, and they don't have time to cool down, what happens is the stock starts to get a little overstretched or over what we call overbought. If you think of it like if you were to take a car, right, and you were to, rev the engine for a really long time, even if, let's say you're racing and you're going at 120, 130 miles like me and Jehu were earlier today in our new Mach-E's. Shout out to Ford.
Congrats on that. Congrats.
Appreciate you. Appreciate you, man. We racing down the highway, right? Your engine will start to get hot, right? It'll start to get overheated, right? So you need to let the engine cool down in order for you to be able to take off again, or to be able to, to continue driving in a healthy manner. So when the stock goes up, we don't want stocks to just go up in a straight line. We want stocks to do something like this, right? Go up like that, come down, go up like that, etc. Right. So this is how a healthy stock movement looks something like this. It has time to cool down a little bit, goes up again, time to cool down, or even preferably even more so something like, something like this, where it'll go up and then it'll kind of hang out for a little bit and then it'll make another. We want to see a stair step. Right. And so what we want to do as traders is we want to catch it here. Right. And then we want to sell it here. And then we want to wait for, we want to wait until we get confirmation that it's going to go again. And then we want to enter again here. So I'll give you a perfect example of that is right here where you see Tesla all the way back from, let's say, this point. So Tesla popped up. We had a nice, long, healthy run right here. It went up, right? And then we got a yellow candle told us to slow down. Red indicator, this triangle here, said that we might be at the top. And then we had a nice, little, healthy consolidation point. What consolidation means is that the stock is basically just They reached a level, and then basically buyers and sellers are basically just kind of battling with each other over a price. So right now, the stock market is made of buyers and sellers. If more people buy than sell, then the stock is going to go up. If more people sell than buy, the stock is going to go down. And when you have this type of action where it's kind of in between, basically buyers are saying that they want it to go higher, sellers are saying no, it's too high, and it kind of chills out like this for a little while. And that's healthy. So we want to sell up here, and then we want to let the buyers and sellers battle it back out. We don't want to be the buyers and sellers that are battling it back out, because we don't have certainty who's going to win. So we want to wait until we see an established winner, which is where we get something like this. Now we see that consolidation is breaking out. The buy signal comes in, and now we know that the buyers have taken control, and now we want to go ahead and hop back in for the next ride up.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.